Jawad Ahmad. Today we are present in our next economics class in which going to discuss the 10th learning objective of this chapter, that is reasons for price instability and government policies. It is the most interesting topic of this chapter. Everyone wants to know why there is so much price instability in the market and where is the role of government in all this scenario. So before we can start this class, kindly subscribe my channel so you can get all my videos on a timely basis. Let's start this class. In certain markets, prices are relatively stable, and whereas there are also some markets where the prices change is dramatically, means the prices change on very rapidly. What are the common reasons for instability in the price? First one is weather conditions. Weather condition matters a lot. If it's a favorable environment, then demand for some products increase or decrease. So weather condition, whether it is favorable or unfavorable, can dramatically affect the size of the market, because in some areas new customer enter into the market where the weather conditions are suitable. When the weather conditions are suitable or favorable, either in terms of goods or in terms of number of buyers and sellers, it will affect the prices very largely. If there is high demand for a good in a certain weather, for example, warm clothes, cloth demand in weather conditions, or demand for fuel in the winter days, this will increase their prices because their demand is going higher and higher, and there is limited supply available in the market. This will make their prices increases. And what is the effect where there is a change in number of buyers and sellers? Place where buyers and sellers come to exchange their products and services is called market. So, what is the impact on the market when there is greater number of buyers or sellers? When there is high number of buyers, it means demand increases, and normally the price for the products also increases due to the limited supply available in the market. And where the number of suppliers increases, it means there is a greater supply of the product in the market. Greater supply means that there is only a limited buyers available in the market. So demand will be normal or demand decreases, and due to this prices also decreases. So this is the impact of increase and decrease in the number of buyers and sellers and the nature of good. So weather conditions have a very great effect on the size of the market, whether discussed in terms of good nature or whether in terms of number of buyers and sellers. Next point is inelastic demand and supply of products. Inelastic demand means that the customer is ready to purchase a product at any price level. So we can also note down it here. Inelastic demand means that customer will buy the product at any cost level. So if there is such demand products whose demand is inelastic and supply of the product is also available in a limited or in an extra quantity, then the more elasticity that exists in supply and demand, the more price stability exists in the market. Third one is periodic fluctuation. There are some products that take substantial or sufficient time for reproduction may have some periodic fluctuation due to their short delivery or due to their substantial period delivery. So, periodic fluctuation in the market where the amount produced must be chosen before prices are observed. Especially this happened in the agriculture products where they take a substantial period of time for the reproduction of the good. Sometimes they are called seasonal products. So there is a main difference or time gap between planting of the product and harvesting of the product. So these are the common 3 points that are being observed in the market where there is a high level of price instability. First is the favorable and unfavorable weather conditions. Second is demand and supply elasticity of the product. And third is periodic fluctuation. Now come to the government role, how the government can control or increase price stability in such market where there is a high level of price instability. First is government policies. Government can control this all effect through making their policies more stronger and more customer and more supplier oriented. So they have plenty of supply in the market when they required it, and especially in the case where demand for the products increases. We can or the government can control direct payments or providing subsidies to producers for producing particular groups or particular crops. There are some crops, for example, cotton, wheat, rice, and others that belong to the normal usable conditions of the customer, means customer demands that goods at any cost. So government should introduce some subsidies or providing some reliefs to the producers so they can produce more quantity of such goods whose demand is always high as compared to other products. Second is buffer stock production. Buffer means extra production. If it is observed that a product is being demanded in high product quantity at each seasons, then the government can introduce buffer stock scheme in which they can purchase such products that create some price instability in the market and provide them these products to the market when there is a shortage in the market. We have already studied in the topic of market equilibrium, where there is a market equilibrium level, means the level at which quantity demanded is equal to quantity supplied. If this price is known as equilibrium price and such quantity is known as equilibrium quantity. If we move upward from this area, it will create surplus in the market. So when there is a surplus in the market, government should try to purchase such goods which are available in the market at the time of surplus market conditions so they can provide these goods to the customer at cheaper prices when there is shortage in the market. When shortage is always created when we move downward from the equilibrium price level. This is a level where there is a shortage in the market. Government can sell this surplus goods to the same market when there is shortage in the market. So in this case, the price instability can be covered through this government buffer stock scheme. But if we can see, on the other hand, each quality has its own disadvantages. For example, if government can increase a product at higher prices in order to facilitate the suppliers at the time of surplus in the market, this will encourage overproduction, which may lead to dump in the world market. Means supplier will try to produce more and more as he has a facilitation that government will ultimately purchase from it. This will increase bulk of purchase in the market and it will create a greater problem for the government where to dump this product in the market, where to utilize this product or where to sell those products, as there is always a limited demand in the market of any society. Second is, or the second problem is, government needs bulk of funds in order to purchase bulk quantity from the market. It will increase government expenditures, which will adversely affect government balance of payments. Means government have less funds in order to be paid for international debts. The other problem that we always encounter is it is extremely difficult to decide price at which the market should be sustained or stabilized. It is always dependent upon the government to decide in world economic condition they should decide which price is suitable in the market. For example, if there is a surplus in the market where the demand is less and the supply is in excess, government or government usually enforce the supplier try to reduce their price level to equilibrium level or a price level that is acceptable for the demand holder, that is the customers. So it is always difficult for the government to decide what price should prevail in the market. So this instability can be overcome or the problem can be sorted out. The last and not the least, the problem is there is a lot of administrative efforts. For example, administrative efforts means government employees have to set aside plenty of their time for overcoming